Before the video will start, LiteFinance has important notice for all IBs from Nigeria. I invite you to participate in Best IB contest. You can win SUVs, $5,000 travel packages, MacBook Pros and many more money prizes. To participate, register with the link from the description under the video or in the pinned comment. Hello guys, in today's video I will be talking about I think one of the most frustrating moments that traders are experiencing during trading. And I mean stop hunting. So tell me, have you ever encountered a situation where you have opened a trade but the market went the other way, triggered your stop loss, and immediately after that the price turned around and went into the, we can say, right direction, basically according to your prior estimates, to your prior forecasts? I think everybody have had experienced such a situation, such a frustrating moment in your career. And so today I will be talking about maybe not to how overcome it, because I think it is impossible, but maybe how to deal with such situations and how to manage your transactions during such moments. And so this is the Euro USD currency pair chart. It is a daily time frame, but I think it doesn't matter. It can be shown on a lower time frame or higher, doesn't matter, because we could find the same situation for every time frame. But let's say we have the situation right here. The price is going down. We have the nice spike, false move, going down, and here we are in this current moment. So we can see from the left side that here is a very, very important support level. And so from this support, the price bounced perfectly. It's, we can say, perfect match. We can see that it goes up and up and up, and we have received some signal information that the price could potentially be going further upwards. I don't know, some technical indicator, it doesn't matter. Some signal that it convinced us to open a long trade. So let's do this right now. Let's say we are opening over here. This is the recent low. So let's add, we have 164 pips. Let's say we are adding to 170 pips our stop loss. And so let's say we are targeting 2 to 1, right? But after that we see the price, of course, goes down and triggers our stop loss right here. And so after triggering your stop loss, the price breaks through this support level. And if you are in this moment and still you have some of indicators, some signals that it should reverse over here, but maybe just slightly lower, and you still are convinced that the long trade is a right decision, is the upward movement is a right direction for the price, then you should just wait for the textbook situation to occur, because after such breakouts, the best thing that can happen is the retest of the previous level, like it happened recently in oil market. You can see that we broke through $100 level, we retested, and most likely we will continue to the downside. But let's go back to our example. So if such situation occurred and there are still signals, so on, as I said, that it should go up, you wait for the retest. So we had this candle, this spike up, this red candle, and after this red candle you can see that, okay, at this moment there are two possible ways of solving this situation. Either the price will continue to go down and I was wrong and I just lost on this trade, or I was right, I am right, and the price will turn around and go up. So therefore what we can do is to set a buy stop order. So in this way you could set stop loss at the recent low, which would be slightly below this wick down, and as for the take profit, 2 to 1 risk reward ratio. And so what it does, it is, we can say, a chance for you to retrieve the loss over here and either way make some money because of the risk reward ratio. So basically, after such a scenario, you are seeing that, okay, still there is a possibility that it will go up. It is most likely for you. So I am setting a buy stop order at this level. And if I was wrong, the price will continue to go to the downside. Then this order would not be triggered, and therefore I will just lose money on this trade. And so that is the best option to deal with this kind of situation, because yeah, as you can see, this scenario was, we can say, textbook. We broke out, retested, and after this long red candle over here is then, we can say, decision-making moment. Either I was wrong and the price will continue to go down, or I was right and it should reverse and go up. So therefore I could set a risk-free order with a long trade. So basically, after this, after the price reaching this level, the order is triggered, the transaction is filled, and yeah, we have opened a long trade. And as you can see in this situation, it was a right choice. So yeah, that is I think the best way to deal with the stop hunting, because it is impossible to 100% avoid that. It is impossible for us retail traders to manipulate the price, or just be angry, because that's not the solution for the situation. It happened before, it will happen in the future. So the best way to do for us is to just prepare for such situations. So as I said, after initial moment when we were wrong, when we still have the confirmation that the price should go up, we just add at the right moment the buy stop order, because not prior to this one, because as you can see, if you would set it earlier, it would be triggered and possibly filled with a loss, because you would most likely set a stop loss somewhere over here. That is why we are waiting for the retest, and this is a textbook situation. As I said, we are waiting for the retest, then we are waiting for a significant move downwards, and that is the moment when we are deciding, okay, from that moment the price either can reverse go up, or it will continue going downwards, and I just need to book and cash this amount of money that I lost over here. I guess that will be all for this video, guys. I hope you liked this one, learned something, and I'll see you in the next one. Take care, bye.